At Metropole TVKE across all your social media platforms. My name is Elijah Charles Kiage. This is your official economic review this morning. Let's get into that. Now, two Kenyans have petitioned the court to stop the Kenya Revenue Authority from increasing excise duty on a selected number of products by 4.97% in line with the average annual inflation. Mr. Isaiah Odando and Mr. Wilson Yata argue that should the decision go on, Kenyans will fail to withstand the pressure that will become the high cost of living with manufacturers expected to pass the cost to the consumers. Now the changes will take effect as from October 1st. That will see beer rise by 5 shillings and 77 cents a litre. Spirits will jump by 13 shillings and 20 cents a litre, with petrol expected to go through what seems like a second review in less than a month, with the commodity expected to increase by 1 shilling and 9 cents. Under the review, the price of one stick of cigarette will increase by 16 cents in line with a rise in excise tax from 3 shillings and 31 cents to 3 shillings and 47 cents, while duty on bottles of water will rise from 3 shillings and 31 cents to 3 shillings and 47 cents per litre. All right, let's look at where we are in terms of those inflation numbers this morning before we get into the conversation. Good. And if you look at where we are, then you will say that we closed 2020 at an average of 5.4%, and you will see exactly that report, the Economic Survey Report 2020 by KNBS, that did indicate that we peaked at around 5.4% in 2020. But then if you look at the quarter by quarter analysis of that inflation trend in 2021, as shown by our next data set, then you're going to say that we are currently at 6.57% in terms of inflation. And now we do know exactly what adjusting fuel prices in the country does to that inflation number. You do expect that that is going to jump up again. Now, fears are that it might cross the 7% mark, but most analysts are saying, well, it will be retained within the 2.5 to 7% mark by the Central Bank of Kenya. All right, let's cross over to the next one this morning, and you're going to see exactly where we are in terms of VAT and excise duty. But more specifically, I want you to look at the excise duty, which has been also on an increasing trend all the way from 2015 to 2020, meaning that KRA has been having their way in terms of these adjustments as they are mandated by law. That's why those numbers have been increasing from 2015 to 2020. All right, let me introduce Josh Osando, who's a public policy analyst and political strategist this morning, who's joining us for this conversation. Josh, good morning, sir.
Good morning, Simba. How are you?
Fine, happy to have you around. Let's understand this. Will this adjustment, compounded with the latest review of fuel prices in the country, push inflation up beyond CBK's margin of 7.5%? Because now, Josh, we are at 6.57%.
Yes. I don't think it will push it beyond 7.5%. First of all, let's have a context as to why we have this adjustment in the first place.
Yes.
In the run-up to 2015, I think the 5 years before 2015, there was this conversation that government is the single largest procurer of goods and services. And so like any procurer of goods and services, when there's inflation, then government is not immune to the vagaries of inflation. And so there was a logical agreement that the revenues government collects needs to be protected against year-on-year inflation. And that resulted in the Excise Duty Act of 2015 that gave the Commissioner General of the KRA the power then to increase excise duty on select goods. Now, what the Commissioner General does when he's selecting these goods is, number one, he selects non-essential goods to increase excise duty. So what we call the sin tax. So you'll have your alcohol, you'll have your cigarettes, you'll have your spirits, and so on and so forth. But also, because if you own the products or non-essential products, then you might not collect as much to offer the protection. So then that's where fuel comes in. Now, as to whether the adjustment will then push inflation to above 7.5%. And I think there's a lot of thought that goes into what items to select and how to adjust for this inflation. So if you're adjusting for the inflation as announced by the National Bureau of Standards, it's difficult to then exceed the limit set by the central bank. That being said,
Yes.
I think it'll be difficult for the Kenyans. I understand where the petitioners who are petitioning the court are coming from, but short of petitioning the court to declare the Excise Duty Act of 2015 illegal, then it's very difficult to reverse this, because the act gives the Commissioner General the power to do this, so he's doing it within the law. Number two, the act does not require him to go to Parliament or anywhere else. It just requires him to give a Gazette notice 1 month in advance, which he did this month because the changes are taking effect in
October 1st.
Yeah, so I see where the petitioners are coming from. I, however, don't see a very high chance of success for the case, because unless they are I haven't read the petition, but unless they are petitioning the court to declare the Act of 2015 illegal, then it'll be very difficult to make any leeway in that sense. But that being said, I mean, the pressures on Wananchi are going to be felt heavily.
Yes. All right, Josh, let's look at exactly what they want to achieve under that. And case in point, you see, commodities like fuel will look as if they'll go through a second review in less than a month. I mean, that's where they're coming from. So if we want to talk about, again, the fuel of petrol, which is now going at around 134, it will jump to 135. That's an extra pinch again on that as well. Diesel again will also see a rise, albeit by just a couple of cents, and the other products here that will then also go on through that rise. But then, indeed, Josh, we are saying here that it won't, because it's right within the inflation numbers. That is, we're adjusting at an average of 4.97%. But then we're talking about the residual effect that would also impact on that inflation, Josh. That indeed, right now, the latest review on fuel in the country is not in any case related to this inflation adjustment that we're talking about here this morning. And we'd expect that manufacturers are going to also respond by increasing the cost of the commodity that they're releasing into the economy. And now again, the adjustment has been made again as from October 1st. Is that the worry that the residual impact on inflation, as opposed to this one, which is right within that 4.97% annual average inflation?
Yeah. I see where you're coming from, Simba. Yes, there will be an effect. I think the question is as to whether that effect will then cross us the threshold of 7%, you know?
Yes.
So I think there will be an effect. I don't think it will then push us to that, you know, beyond that cap set by the central bank.
Yes.
Yeah.
Pretty much. So let's see exactly then ask another question, Josh.
Yes.
You see, with this recent review of fuel prices in the country, again, KRA is now again coming and say we have to readjust it again just to reflect exactly what's going on in the country. Do you think that the Central Bank of Kenya is finally going to be compelled to get into monetary interventions to keep the rate of inflation in check?
I mean, so far they maintain that things are okay as they are, and that no drastic interventions are needed.
Yes.
But I think once we get into October and the fuel adjustments are done, I mean the price adjustments are done on the various products, particularly fuel, and depending on how that adjustment will be done, because again, you know, normally the excise duty increase does not necessarily reflect the price at the pump, because ideally we are looking at an average of a shilling, between 50 cents and a shilling increase on all fuel products, between on units of alcohol and so on. But I mean, we know how I mean, this is a multiplier effect. For example, if I'm an alcohol production, then I'm buying fuel.
Yes.
So I will not just adjust for the excise duty increase. I'll also adjust for my cost of production going up as a result of the fuel prices going up. So depending on how producers react to this adjustment, then we might see CBK stepping in. But if they react as to what the prices have been adjusted to on paper, then I don't see the need for monetary intervention by the CBK.
Pretty much. All right, another question that we're picking from this data set that we have for you, which if we could actually take it back again, because that's from 2015 again, Josh, all the way up to where we are in 2020. If you look at that VAT and excise duty trend again, you're going to see that indeed it has been on an increasing trend. Richie, if you could actually give us that data so we could actually get into the absolute figures. And all the way up to 2020, it has been increasing.
Yeah.
What does that tell? Is it the story of the government always increasing it upwards? Because you and I do know that it's not always that we end up with an increasing inflation trend in each specific year. Sometimes it comes down again. But why do we have the data that tells the opposite of that story from 2015 to 2020?
I haven't seen the year-on-year numbers, but I'm confident that we've never had a reduction in inflation year to year between 2015 and now.
Yes.
And part of the reason has been, the spending on infrastructure, the economic challenges. So prices have increasingly gone up. The shilling has been weakening against the dollar, and so on and so forth. So, but it's indicative of, just Parliament granting the Commissioner General this power is indicative that we can tax ourselves into prosperity, which really isn't true. And this has been the Achilles heel of the Jubilee government, because the assumption is if you increase taxes, then you increase revenues. But ideally, how an economic system is supposed to work is widen the tax base, increase productivity, perhaps even reduce taxes and then collect more. So there's the hardware, which is the law that allows the Commissioner General to do that. I'm curious to see, because I'm foreseeing a situation perhaps next year with tourism improving and the shilling strengthening against the dollar. Perhaps if oil prices cooperate, then we might see a reduction in inflation. I'm curious to see that if that happens, then the Commissioner General again will release a gazette notice to announce a reduction in excise duty. Unfortunately, again, we're going into an election year, so that might not be the case in as much as we would like to be. Again, election years, there's a lot of campaign money circulating, so again, that impacts inflation.
Pretty much.
So, yeah.
All right, Josh, let's move on to the next issue that we have for you here this morning, where the Kenyan shilling is trading on a 9-month low of 110.30 against the dollar on the back of a high import bill and costly oil prices, as well as the strengthening of the US dollar. Crude oil prices rose from $42.35 a year ago to $72.34 a barrel in this month's figures, which means that the country has to spend more to buy the dollar to get the commodity, with oil imports accounting for 16.3% of the import bill at 190 billion shillings in the 7 months to July. Other declines in sectors that bring in the dollar, like tourism and exports, have continued to see the Kenyan shilling trading at its lowest level against the dollar amid its fears that the US Federal Reserve will start cutting its bailout program. Let's see exactly where we are in terms of that trend then, because we're keeping a tabs on it. You can see exactly where we are. Came back down to around 107, 106 in April, then jumped all the way to 110, where we are right now. As of yesterday, we were at 110.30, actually looking to go to the 111 level against the US dollar. Josh, that's where the question comes in. We were fearing that within the coronavirus pandemic, when we got into 2020, that indeed we will cross into the 110 level mark. But guess what? Looks as if the Central Bank of Kenya went into the repos market, took those dollars off the market, and we actually saw the shilling stabilize against the US dollar. But again in 2021, are we finally accepting that 110 is the new normal, because we've not seen any sort of reaction from the Central Bank of Kenya?
First of all, let's go back to 2020. I think we also have to bear in mind that in 2020, the oil prices were going down quite a bit. And so with lower oil prices, I mean, obviously you're going to have a stronger shilling. Another thing that happened in 2020 is because of the value chain disruptions and because of the level of the economy, we weren't importing as much.
Yes.
So the pressure on the dollar was much less. Now, come 2021, I think there's a myriad of issues that have caused this crossing the 110 shilling mark. And number one, I mean, we've got monetary normalization happening in the states, and the monetary normalization is increasing the strength of the dollar, so to speak. Number two, we have this safe haven demand for the dollar because of COVID, because of what has happened in the global economy and even in the local economy. So you have people moving their shillings into dollar accounts because they think perhaps, you know, if worst comes to worst, I'd rather have a nest egg in dollars. And then you've got, as the economy is recovering, you've got more imports coming into the country. So we're having more pressure on the shilling. But and more importantly, I think tourism hasn't recovered to pre-COVID levels. If you remember, I mean, if at this time, after the wildebeest migration and the August high season, this is when tourism would have been at its peak. So we would have been having that foreign currency coming in, particularly dollars, and sort of, you know, strengthening the shilling in that regard.
Yes.
That being said, I think the CBK seems to be a bit confident because they're saying at least we have up to at least a little under 6 months worth of reserves. The statutory requirement is that they maintain 4.5 months worth of reserves. So I don't think it's doom and gloom, but I think it's cause for concern.
Isn't it? All right, let's talk about then what we expect that trend to be, Josh. Because if you look at exactly what we're talking about, our export numbers, they've been recovering again in 2021, but they're not back to the 2019 levels. We do know tourism is projected, Josh, to recover in a 2023 in the last quarter. Think about that, because then it's much tied to exactly how many Kenyans we can vaccinate now. And when you look at that, does it also say that indeed now, in the next few years now, let's say 1 or 2 years, that 110 plus level could be where we need to settle to?
I mean, depending again on global oil prices, I think that the primary driver is the global oil prices. Unfortunately, even if we were all vaccinated and even if we decided to turn around tourism, we're going again into an election year. And in election years, our tourism is slumped. And again, I think the timing of our election date to around August was totally wrong. It wasn't really thought through because, again, for our local and international tourism. So I think it's bound to go higher. It's bound to go higher, and it's bound to stay high for a long time. And as you said, I mean, we're expecting full recovery for tourism in 2023. So we are looking at that sort of timeline. We're looking at perhaps above 110 levels for the next 18 months or so.
So do we expect that international remittances that have been coming in on a high as well, Josh, might actually take the pressure off the Kenyan shilling in the short term? Definitely,
and especially because we are seeing COVID recovery in the West, so where our diaspora community resides, and part of the reasons remittances were dipped last year is because of that uncertainty.
Yes.
But now that things are a bit more certain, now that they are rolling out vaccines at a very fast pace in America, in Europe, and so on and so forth, then you're seeing that our diaspora community will be more willing to send money back home. So that might be the saving grace, the remittances from abroad.
Pretty much. So somebody asked this question then, Josh. When you look at exactly how the Kenyan shilling has been trading against the greenback, in what way can we start to say we can manage it from within ourselves? And are we sort of also tied to the physical discipline or indiscipline that the government has been getting into, to the point that we have no way to wiggle ourselves out of this? Can you relate the way in which the government has been taking in debt and actually getting into those interest repayments now as another reason why the dollar might be gaining so much on the Kenyan shilling?
I mean, for sure, for sure. We are taking debt in dollars. We have to start repaying that debt. So definitely the fiscal indiscipline of this government is coming to bite us in the behind now. And unfortunately, we have very little wiggle room. There's
Yes.
very little we can do internally, except hope for the best. I mean, especially against the backdrop of COVID, we are in a tight spot, that's for sure. And it's a consequence of the fiscal indiscipline that we've experienced since 2013.
Interesting. That means that we have to wait a bit longer for us to see the shilling stabilize against the US dollar. That's exactly what we have for now. We take a short break. Once we come back, insurance regulator did give us the results for the first 6 months of this year, just sort of painting a state of the industry. We'll be telling you how premiums have shot up, but then at the same time, the claims have also been racking up. Where are they if you look at those of that report once we come back?